You think you bought a car. The dealership hopes you never realize they barely cared about it. Sat across a desk, watched a salesman draw four squares on a piece of paper, and somehow, 20 minutes later, you left owning a car and understanding almost none of the math that got you there. Here's the thing, nobody explains on the drive home. Dealerships don't actually make much money selling you the car itself. The sticker price war, the haggling, the let me talk to my manager, walk to the back office, that's mostly theater. The real money comes from something that happens after you've already agreed to buy. Sitting quietly in the paperwork, you're too relieved to read carefully. Let's start with the four squares, because once you see how this works, you will never look at a car dealership the same way again. The technique is exactly what it sounds like. A salesperson draws four boxes on a sheet of paper or pulls out a pre-printed one, because apparently this trick is common enough to warrant its own office supplies sitting in a drawer next to the pens that mysteriously never work. Top left, the price of the car. Top right, your trade-in value. Bottom left, your down payment. Bottom right, your monthly payment. Four numbers, four boxes, and here's the part that makes it genuinely clever in a slightly evil way. Most buyers only care about one of those four boxes, the monthly payment. Think about how you'd actually shop for a car. You don't walk in thinking, I want to spend $28,300. You think, I need this to fit under $500 a month. That number is the one your brain latches onto, because it's the one that has to fit your actual life, your actual paycheck, your actual budget. And the dealership knows this better than you do, because they've watched thousands of people do exactly the same thing in the exact same chair, under the exact same fluorescent lighting that somehow makes every decision feel more urgent than it actually is. So here's what happens. You negotiate hard on the trade-in value for your old car, feel genuinely proud of yourself for pushing back, and win an extra $800. Congratulations. The salesperson goes back to the four squares, quietly raises the price in another box to make up the difference, and presents you a new monthly payment that looks almost identical to the one you started with. You won the trade-in negotiation. You lost the actual math. This works because the four numbers are never negotiated one at a time. They're presented as a tangled bundle, shuffled together until isolating any single number becomes nearly impossible in the moment. Sitting in an uncomfortable chair, wanting this whole process to just be over already. Here's the crazy part. That's not even where they make the most money. Now let's talk about where the actual profit really lives. And this next part explains why the salesperson sometimes seems weirdly relaxed about negotiating the car's price down, almost too easily, like he's got somewhere better to make his money back. Financing is the quiet engine behind most dealership profit. When you finance through the dealership instead of walking in with your own pre-approved loan, they often mark up the interest rate above what the lending bank actually offered them. That markup, sometimes 1, 2, even 3 percentage points, goes straight into the dealership's pocket, spread out quietly over 60 or 72 months, so it never feels like a single painful number. It's just your rate, presented as fact rather than as a number with a hidden margin built directly into it. Here's a real-world version of how this plays out. A buyer negotiates what feels like a fantastic price on the car itself, walks in feeling like a shrewd negotiator, mentally already composing the story they'll tell at dinner about how well they handled the whole thing. But because they never got pre-approved elsewhere, they have no comparison point for the financing rate they're offered. The dealership quietly inflates the interest rate by 2 points above what the buyer actually qualified for. Over a 6-year loan, that difference alone can cost thousands of dollars, invisible the entire time because it's buried inside a monthly payment that still felt on paper like a win. The dinner story stays the same. The math behind it quietly doesn't. Then there's the trade-in, which deserves its own honest explanation. Dealerships typically offer you less than your car's real market value on a trade-in, then turn around and resell it, often at auction or directly on their own lot, for meaningfully more. The gap between what they gave you and what they get for it later is pure profit. And it's profit that most buyers never think to question because trading in feels convenient. One stop, one transaction, drive away in the new car without ever dealing with the hassle of selling your old one yourself. Convenience has a price tag. It's just never written down anywhere you'd notice. Now it gets worse. There's one more room you haven't walked into yet. And finally, the finance office, the last stop before you drive off the lot, where the real performance begins. This is where extended warranties, paint protection, fabric coating, and a rotating cast of add-ons get pitched, often with genuinely alarming statistics about what could go wrong with your engine, your paint, your upholstery, if you dare to leave without the extra protection. Some of these products carry markups exceeding 100% over what they actually cost the dealership to provide. The pitch is fast. It's wrapped inside a stack of paperwork you're already signing anyway, and it's delivered by someone whose entire job, quite literally, is convincing you that saying yes here is the responsible thing to do. If you're leasing instead of buying, there's a version of this same story with its own hidden number called the money factor. It sounds like something out of a fortune cookie, but it's really just the lease equivalent of an interest rate, quoted as a strange, small decimal instead of a clean percentage specifically, so most people never bother converting it into something they can actually compare. Multiply that decimal by 2,400 and you get the real annual interest rate hiding inside your lease payment. Dealerships know almost nobody does that math in the moment, which is exactly why the number gets left in its confusing, uncoverted form on the paperwork in the first place. Here's what all of this actually adds up to, and it's worth sitting with for a second. The car itself, the thing you spent weeks researching, comparing trims, reading reviews about, is often the smallest piece of the profit puzzle. The real money lives in financing markup, trade-in spread, and finance office add-ons, 3 quiet revenue streams that require you to be distracted by exactly one number, your monthly payment. So here's what actually protects you. And none of it requires you to become an expert negotiator or memorize industry jargon. Get pre-approved for a loan from your own bank or credit union before you ever set foot on a lot. This single step removes the dealership's biggest advantage because now you have a real number to compare their financing offer against instead of just trusting whatever rate they hand you. If the dealership can beat your pre-approved rate, wonderful, take it. If they can't, you already have your financing sorted and their markup has nothing left to attach itself to. Negotiate the car's price completely separately from your trade-in value and separately again from your monthly payment. Ask directly for the out-the-door price, the actual total cost including every fee, before any conversation about monthly payments even starts. If a salesperson tries to pull the conversation back toward, "But what payment works for you?" that's your signal they'd rather you stay confused about the total. Consider selling your trade-in privately instead of handing it straight to the dealership, even if it takes a little more effort. The difference between a trade-in offer and a private sale price is frequently significant enough to be worth a few extra weekends and a handful of slightly odd phone calls from strangers. One more number worth knowing before you ever start negotiating. The sticker price you see in the window, called MSRP, is not what the dealership actually paid for the car. There's a separate number, the invoice price, sitting closer to their actual cost, and it's frequently thousands of dollars below the sticker. Dealerships aren't required to show you this number, and most buyers never think to ask for it, anchoring their entire negotiation to the sticker instead. Researching a car's approximate invoice price before you walk in gives you a genuine starting point for negotiation. Instead of negotiating downward from a number, the dealership picked specifically because it had plenty of room built in. And in the finance office, when the extended warranty pitch begins, you're allowed to simply say no, repeatedly, if necessary, politely. The statistics about catastrophic engine failure are almost always wildly exaggerated compared to the actual likelihood, and you can always price warranty coverage independently later. outside the pressure of a finance office chair, specifically designed to make 30 more seconds of hesitation feel expensive. One more thing worth knowing if you're shopping for a used car specifically. Certified pre-owned sounds like a safety guarantee, and to some extent it is, but that certification also comes with a markup of its own, sometimes $1,000 to $3,000 above an equivalent non-certified used car. The inspection process behind it genuinely does add value, but it's worth asking directly what the certification actually covers before assuming the higher price automatically means a meaningfully safer purchase. None of this makes car dealerships evil. It makes them a business, one built around a very specific, well-tested understanding of which number your brain fixates on under pressure. Once you know where they're actually making their money, the four squares stop being confusing and start being something much simpler to see straight through.